Good morning, Scott Redler, Chief Strategic Officer with T3Live.com, and welcome to today's morning call. As you can see, a little lonely. I don't have my correspondents with me. Anyway, I'm going to do what I can to lead you through today's action. As you can see by the headlines, everyone's talking about, what's the Fed going to do today, Operation Twist. To me, I'm a technician. I'm going to look at the action of the market. I'm going to see what's going on, see where there's opportunities. Obviously, a lot of headlines still to deal with. They still don't know exactly what's going on with Greece. Are they going to get the last tranche? Everyone doesn't know what's still going on with President Obama as far as pushing forward with the tax hike on the millionaires or rolling back the Bush tax cuts. There's a lot of headlines going out there. But there's been a lot of great activity in the market. And as far as yesterday is concerned, that put a little damper on this rally, in my opinion. What we had yesterday was a bit of a push-through failure, what we call in technical land, where you see stocks push through previous day's highs and then close on the lows for an outside day / distribution day. Not a day to say game over, the market's done, the rally is over, just a day to clean up some positions as we approach the top end of the range. You hear a lot of people talking about 1,200, 1,225 in the S&P, the higher end, that's where the 50-day moving average is in the SPX or S&P cash, and that's what we stalled yesterday. So to me, I'm going to look at the charts. I'm going to show you levels that I think needs to hold in order for us to push higher in the coming weeks. So if you take a quick look at the S&P, let me show you what I'm looking at. First, I have to talk about the Head & Shoulders top. We put this out there this summer. Obviously, it triggered at 1250, gave you a move down to 1101. If you saw this pattern and if you follow the show, you saved yourself a lot of pain and anguish. Where are we now? This is where we are in the markets. We had a nice reversal last week. You know what? I'll even get you a little closer so you can see it. Nice reversal at that 1135. This was an outside day on the bullish side, which led to a move back to the top end of this range. Yesterday, we tried to push through, tried to hit the 50-day, reversed pretty hard. So what I'd like to see is I'd like to see the S&P hold higher. I want to see commitment to the buying. I want to see 1190 hold here or 1188 on the S&P, because if we do, and we can get through Fed Day or Operation Twist Day, there's a chance that we move higher and we break above this range, and perhaps by year end, get to 1280 to 1300, which from here, as a market timer, there's a lot of money there. Now, we all know that leading the market has been the NASDAQ. We've been holding above the 50-day. High beta tech has been unbelievable. Even mega cap tech like your Intel, your Microsoft, some stocks in the semi group like SanDisk, they all joined the party. And people are looking for dividend stocks that have some growth and liquidity because you can't get any yield in the banks. But anyway, if you take a look at the Qs, you will see they actually pushed higher. This chart is acting better. It was above the 50-day. It closed below it yesterday, which is a bit concerning. That, again, little sell signal. So we have to see where it is right now. So on the Qs, you will see, we did push through, into upper resistance. You see this little point of reference here around 58. It closed right around the 50-day. And look how this has already cleared this lower range. Okay, so showing you strength. This is where the money is. This is where people are having some success. I'd like to see if the Qs can hold this. I would say, what is this, around 55? If we could hold 55 and go sideways, I think that the momentum in tech will stay there. And you could also see a move potentially to this trend line, okay, which it's been intact, which could, I would say, stir things up a bit if we break this area, but the rally is still intact if we could hold around 54. So tech is something that I'm going to watch. I'm going to continue to watch the leaders. And you all know that in the sector spotlight, I'm going to go over the stocks that have been acting well that gave us short-term sell signals yesterday. All right, for market participants, what I suggest is your time frame. If you're cash flow trading, actively trying to maneuver the market, yesterday got you flat. I'm flat right now. I've been trying to hold 4 to 6 to 8 positions over the course of the past week or so since the rally. But yesterday's push-through failure got me flat. And if you're a macro investor that's trying to actively manage your portfolio, I still think you're in tier 1 long, but if you had tier 2, tier 3 for momentum, you had to take it off yesterday because I think we're due for a rest. I want to show you right here with Apple. Apple has been one of my babies. I talk about it all the time. A lot of great buy zones, this being one of them around 382, then through 392, and then when it cleared the old 52-week high of 404.50. But look what happened yesterday. You had a quick move higher, and then it closed on the lows, showing you a shooting star top. Not saying game over, but that means you just had to move from 370 up 7 days in a row. It's due for a rest. That's why I said you can't chase excitement. So with that being said, I think you could look to buy Apple back. Usually they do retest old highs, sometimes shake the tree. So we could see a move back in Apple to this area, and that's where you buy some if you sold correctly yesterday, and I did sell my Apple yesterday. In some of the other leaders, we talked about BIDU and SINA yesterday. There was a lot of rumors out there on SINA about the government intervention. No one likes to hear it. Finally hit the stock. It also hit BIDU. So as a trader trading momentum, you have to act fast. When you trade a stock for momentum and it gets above the level and then fails at that level, you have to get out of the way, because that means that trade is off the table. If you look here at BIDU, let me show you what I'm talking about. We talked about 148, 149. It tried to break above this level. Tried. And then turned tail and broke hard. So if you saw this happen, you could have tried for it, but once it couldn't hold this 148, 149, you run for the hills. It closed very weak. At this point, it's going to have some work to do. I am flat BIDU. Some people might even short it if it gets through this 138.50 because it's got some room and it did just break this rising trend line. And if you watched SINA yesterday, this gave you some clues that BIDU might be in some trouble because they do move as a group. And look here in SINA on a macro level, really didn't clear the macro downtrend. We've had some trades along the way, but look at this action yesterday. This broke hard on volume. This is, to me, now in a void. And most traders will trade it perhaps versus the low here of just say 90.80. But I don't think this is going to get on its horse anytime soon. It's in a void. A lot of headlines out there. Just things change. Okay, as far as even LVS, it's been on our list. I talked about it going above 50. It's been a go-to stock, but even go-to stocks could pause, could get a rest, could correct a bit. And yesterday, it also pushed through the prior day's high and closed below short-term sell signal. Take momentum, shares off, get back to tier 1. Let me show you here on the chart. LVS, look at this move that it's had from the lower end of the range, from 36. It's been riding this uptrend all the way, and finally, you had a nice breakout day. It was above 50, and then it closed below. To me, short-term sell signal. Look at the macro chart here. You will see that it's still in this huge, huge consolidation. Still, in my opinion, sees higher prices, but this is what I call a day to take notice, a day to clean up your shares, a day to take some size off, because it pushed through, closed on the lows. You can easily see a retest of this 46, 47 area, and that's when you get back in. And if it does break this rising channel, which I don't think it does, but you saw BIDU do it, you saw SINA do it, at least you're out of the way and you get to figure out where it goes. So with momentum stocks, key stocks out there, you need to follow the rules. Momentum is only good as long as it stays. So once it leaves and once you see a outside day, it's a day to clean up. It's not a day to take off macro long-term positions, but it's a day to see where we can go, because you never know, and as long as you're out of harm's way, you could always embrace the volatility. So I'm going to go into the trenches with stocks that aren't acting well right after this commercial break.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, we got to take off those glasses. Let's take it back in the trenches with sectors that aren't acting well. Situations that have been pressuring the market, where a lot of the headlines are, and obviously you have to start out with the banks. The banks have not rallied. The banks have given us some small Q trades, but they keep heading lower. And now if this upper end of the S&P doesn't break higher and we start to pull in, we could see further downside in some of these banks. We need to watch key levels. First thing I'm going to show you is the XLF. If you take a look here, you will see that it's in the lower end of this range. The XLF hasn't even tried or attempted to break above this lower pivot like you saw in the SPX, or you even saw the Qs go much higher. So right now, I would continue to watch $12 here on the XLF. This has been support. It's been bouncing off. You have a small little wedge within this little chart pattern here. So if it starts to break below this 1245, if you're holding some banks, maybe loosen up a little bit. And if it gets below 12, you're going to see more pressure in the market. I'm going to watch the key stocks like a Goldman, a JP Morgan, a Morgan Stanley, a Bank of America. They all couldn't do much at all during that entire rally. Like I showed you stocks near their highs. Take a quick look at Goldman Sachs just for psychology. Look where this is. It's a stone throw away from that $100 level. No rally, controlled by a high, lower high, lower high. If this starts to get below 100, you're going to see some pressure on this market, and just look at the same type of chart with some of the others. Another group that hasn't really performed well during this market move, that it was a leader months ago, is the OAHs. You take a look at this oil sector here, and this lower pivot is holding the lower end. So if you take a look-see at this chart, it also hasn't even attempted to break above, this area, this 129, 130, and it's hovering right at this uptrend. So if these OAHs start to break below, your 124, you could see a move lower. Shorts will probably lean in here, and some of the stocks within this group could get hit. And if you look at some of the stocks in this group that were former leaders, were former go-to stocks, but complexion always changes, you'll see why this group is so weak. Look at Halliburton. Halliburton, no rally here. Look what this is. This is pretty gross, guys. This is troublesome. I know everyone says fundamentally it's unbelievable, but to me, it's below all the moving averages, not acting well. If this starts to break below this, what is this, 3770 area, you could see lower lows here. SLB, same type of scenario. Look at this. This stock changed. This is why you have to have stops. Look at this area. Look at this uptrend when it broke. And then if you missed that, here was one area to get out around 90, and then when it broke this important support. And now it's still trapped in this downtrend, looking like it's going to leave to the downside. So this is troublesome here. I'm not going to get into more stocks in this group, but if you go through them, you will see exactly the same type of pattern. Yesterday, Freeport, FCX, copper has been so weak, which is troublesome because that's an indicator on real economic growth. It's not gold, it's not a currency, this and that. It's actually saying that people aren't building, there's no copper demand. I'm not going to get into that. If you look at FCX, just to show you, technical weakness, look at this thing starting to break below the lower end of the range. Shorts are starting to lean in here. People thinking, oh, it's FCX, it has to rally. No, it doesn't, okay? It's showing poor technical damage, and if you look on the longer term chart, it has some room to go, probably all the way down to this 35 area for FCX. And then another group is the lower tier cloud stocks. Not really acting well at all. VMW, we've caught some cute trades. CRM, people are trying to say it's a little fundamentally overvalued. It's not acting well. But if you look at the lower tier ones, these look like they're in trouble. Look at APKT. APKT, look at this little rising channel. Okay, typically they break to the downside at this particular point, below the moving averages. If this starts to get below 45, you could see a move back to the lows. So be careful there if you're long. Some guys might even look to get short on that APKT. Maybe we'll take a look at one more, FFIV. What's that doing? Not much, right? Same type of scenario, same type of chart. You're looking here, it's holding a bit higher, but this was a pretty brutal day. If you look a little closer here, you'll see that this one, broke the upper end, and this is a pretty wide range bar, so we'll see how it handles 75. But this is why it's important to know what's working best. You want to stick with the leaders in each group, and usually you see them, you see the relative strength during market declines, and that's why we outline them, for you week in and week out. So make sure if you're in the trenches with this weak group or these weak sectors, just be careful, and people will be looking short, because if the market doesn't get above 1225 in the S&P and we start heading to the bottom end of that range, these groups will be the first to head to the downside. So right now what I want to do is just take you to some quick hits that I'm going to be looking at potentially to make some fast cash today. Now I know Netflix being one of them, it's been killed, crushed. It showed you its technical weakness over the course of the last 3 months before they came out with the news on the subscriber growth decline. If you look here at Netflix, it's been so battered and bruised. I was showing a few guys before what you could have seen, when these uptrends broke. This was an accelerated uptrend that broke to the downside, giving you clue 1. This was a longer term one that broke, couldn't get back above clue 2. Then obviously it got below this situation and hasn't found a friend since. So what I'm going to look at today is, because I do think it's pretty oversold, and for a Q type of trade, it's going to be my focus, is if it could hold or trade through 129.37, go below, come back up. I do think we could get some kind of rally back to the moving averages around 160. As an investor, I don't think you touch it. It's dangerous. But for a trader, trade it long versus 129.37, or if it breaks below it, comes back up, buy it at this level with the stop at the low of the day. We call that, my friends, the red dog reversal 80-20 trade, but it has to develop, and we'll see if these lines turn into the stock action for the day. So that's Netflix. As far as LULU, retail's been acting strong. I think it reversed yesterday. It needs some time. It's on the go-to list, but it lost some momentum. If you take a quick look here on LULU, I think that this reversal right here into resistance is a little troublesome, not crazy. Still has this nice uptrend intact. I think you look to buy it versus 56 when it pulls in there. Some people might actually even short it if it trades through the 58.75 through that low. Another stock that's been just thrown out the window, which is MCP in that rare earth space. This also shows you that things change. About a year ago, we rode this stock from 20 to like 60, changed complexion, and now it's been totally thrown out the window. Still broken, still needs time, but just like Netflix, I might look for a Q type of long versus the low here. So if you look at MCP, you'll see this is just gross. The damage to the stock in this group is just unbelievable. And as you could see, it didn't rally with the market. It stayed below the moving averages and finally broke below support. So you get out of the way. So now you do have a bit of support down here in this 40 range. I'm not going to do the cost average game. I might look for a red dog reversal if it breaks below 41.33 and comes back up. But if not, I'm just going to avoid, and we could try it from lower levels. A group, though, that's been acting really well are the miners. Okay, gold still holding the upper end of the range. Newmont, unbelievable move. We talked about it weeks ago. Alex Steele loved the miners. She loved them fundamentally. 3 weeks, they got stronger. Just to show you some quick charts, look at Newmont, boom, breakout, awesome. AUI was the leader. I think that this can make new highs above 17. Nice day yesterday. GOLD also, trying to leave this upper range. All these things held their 20-day and their 8-day. These miners look good. Pick one or two of your favorites, but just remember they're a bit of a contrarian play to the market. So now in closing, today's Fed day, Operation Twist. Right now they're saying that they're going to sell the short to buy the long to keep the 30-year down. That's not helping the economy at all. We all know that rates are low, but you can't get them. If you try and refinance your house, you're not getting the low rate because your loan to value isn't there. There's a lot of problems in this economy. There's a lot of things going on right now that the markets are trying to absorb. I still think you watch the action. You watch that 1188 to 1192 as that level there. If it breaks, I think you have to get more neutral to negative versus neutral to positive, which is my stand right now on the market. Then obviously you have 1160 below that. And gold looks to me like it's getting interesting again. It's been very choppy. Traders haven't had a lot of success lately. My long-term thesis, I've been saying go long gold, since 850 with my old friend Mark Haynes. Hopefully his family's doing okay. And at this particular point, it's met my goals for the year, but it can still go higher. So if you look here at the GLD, you will see, you have a descending channel right here. Okay, a bit of a correction since this outside day. That's why I notice these outside days, because look what this led to. So for me in the GLD, I think if the GLDs could start getting above 177, 178, you could see gold in motion for higher prices. The spot price for that, I believe, is around 1825 to 1830. We start getting above that, we could start heading higher. Usually gold moves on Fed day. Here's your support. Here's your area for higher prices. Silver has been choppy. It's been in a void. I think gold acts better. And just all in all, know your time frame. That's the most important part of trading the market, is knowing your time frame, knowing your risk, and knowing what you're looking to get out. Because if you're looking to get a lot out of this market, you got to put in the work. And if you're watching this morning call, you're halfway there. I'll see you at the recap. Have a great day trading.